Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Megan Brantley. She's the Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
Yeah, sorry about that lead-in. I thought Andy was on the show, but this is way better. Megan, don't tell Andy I said that, by the way. But we're looking at Walmart today and some of your sentiment data on this name. And Kevin, to full credit, has been talking about low bar, high bar. We saw it in Target, really low bar, and they beat on that low bar. But Walmart, if I see one more price target hike on this name, it hit an all-time high today. It seems like the consumer sentiment data should be elevated at this point because the stock is.
Yeah, Kevin, I think that our thinking is kind of right in line, at least from a Walmart perspective. Whenever we're looking at the bar that is set, expectations are very high. Whenever we look at our data, we do see improvements when it comes to Walmart, especially just overall consumer buzz. Those buzz levels are up by about 3% year over year. That contrasts greatly with what we saw in Target whenever we were talking about that retailer yesterday. But I don't necessarily think that this is a surprise to the market. We've been seeing this for some time, that Walmart has been welcoming in these higher income consumers and shoppers who are turning to this retailer for perceived deals on staple items like grocery and like personal care items. I think whenever you look at a Walmart versus a Target comparison, somewhat, especially this quarter, it's almost like comparing apples to oranges because the bars are completely at different levels. And also they're kind of leaning into different segments, with Walmart catering more toward that staple versus Target catering more toward the discretionary purchases. So, heading into this event, I would say our data is a little bit muted, which could be a cause for concern. We do see continued momentum. We see buzz levels rising. We see sentiment decent. Walmart still has ground to make up versus other retailers from an overall happiness perspective, but we do see some traction in its Sam's Club bulk brand. So, we're seeing some positive signs in Walmart, but that bar is very, very high.
Megan, Walmart continues to show that a company that's massive like they are can still be lean and agile and move from segment to segment and back and forth. Their sales are expected to be down 2%. Their earnings per share expected to be down 6% to about $1.41. With the run that the stock has had, this is a company that, like I said, Tom and I have talked about, the bar is kind of high here and the expectations are very low. What are they going to say about the U.S. consumer, right? Are they looking for any weakness over the holiday? Are people done trading down to lower prices, and maybe as the market starts to cycle back up, are they willing to go back to a Target or some higher priced places? Because Walmart's unique in its in-store experience, and that's about as far as I can go into that, Megan.
Yeah, no, you're exactly right. I think that that's the big cost for the discrepancy and the gap that you see in consumer happiness levels. 8 or 9 points trailing other peers. The shopping in-store Walmart experience is very different than the shopping in-store experience, even at a Target or a Costco. It's almost not even a fair comparison. I think that one area that we can look toward to see, okay, are consumers still, sticking with Walmart, are those e-commerce levels. E-commerce for Walmart had a really strong showing last quarter. We see that growth level staying exactly on pace with what we saw last quarter. So, if investors are expecting an improvement or, a much stronger growth metric, I don't necessarily know that they're going to get that out of Walmart this quarter, but it is positive to see, that growth is sustaining. That rate of growth is almost exactly in line this quarter versus last quarter. A lot of that has to do with Walmart's making some improvements in its offerings. It's leveraging AI to make search better so that whenever you're searching for something, it is more likely to surface the results that you're looking for. It's also expanding its delivery options. I know that in a lot of stores, it's talking about, later night deliveries. I think deliveries as late as 10:30 p.m. This is more in line. I don't know about you guys, but I've certainly noticed that deliveries are extending later into the day, and this is just something that consumers have gotten accustomed to, that Walmart is finally stepping up to and, competing with these other large retailers that have been offering this for some time. So, there are some things that Walmart is doing right. I think e-commerce and leaning into e-commerce is really strategic for Walmart because consumers almost get to skip that in-store experience, but that growth rate is pretty stale, if you will, on our end.
Yeah, I got a delivery at 5:30 a.m. from, well, not Walmart, but Amazon.
Late night at Walmart, Tom.
I'm like, because you get the alerts on your phone. I could not believe somebody was out delivering something 5:30 in the morning. But Megan, I think the key, you mentioned it, they're making technological advances that I don't think a lot of people realize. You think it's just Walmart, this big box retailer, but when you look at this name, now 4,600 pickup locations, 4,000 same-day delivery stores. They're within 10 miles of 90% of the population. Is the key here that people are trading down and having to go to Walmart as opposed to maybe wanting to go to Target, but hey, inflation's here and things cost less there?
Yeah, I think it's going to be really critical for Walmart to take advantage of this shift that it's seen over the last few months, where it has attracted this higher end consumer base, and can it keep these consumers around? So far, we are seeing that it's keeping the consumers around. Whenever we look at a Target, if you look at this, Target really performed well yesterday because it was able to manage its inventory levels. Its comp store sales were still down by about 5% year over year. So I think that there's still a little bit of a strain on the consumer, at least when it comes to those discretionary items, and that could be helping Walmart in a situation like this. But for us, because the bar is so high, we're kind of approaching this report cautiously, even though we do see some momentum in Walmart buzz, up year over year, and e-commerce levels that are remaining competitive. That bar might be too high. So for us, especially heading into this earnings report, our signal is neutral, but it tends to shift lower on the bearish scale.
Yeah, I noticed that on your one chart where the stock seems to be outperforming maybe some of your data at this point. So not surprising there. High bar, low bar, Target and Walmart. All right, great stuff. As always, Megan, appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio. Kevin, give credit where credit's due. And I like the PC way that you kind of avoided that Walmart.